with Silicon Valley Bank. Welcome back to Strongman Personal Finance. If you didn't know, I am a certified CPA accountant. And I've decided to take you through the balance sheet of formerly Silicon Valley Bank. I don't know what it's called now. And I'm going to show you exactly what happened, because a lot of you think you're financial geniuses and you don't even understand the basics of financial accounting. Can somebody please to explain to me why you would buy individual stocks if you can't even read a balance sheet, if you can't understand an income statement or a statement of cash flows? Now, I know exactly why some of the losses on the loan portfolio of Silicon Valley Bank did not show up on the income statement. Why? Well, we have to understand a little bit about accounting for investments in debt securities. So let's go ahead and pull up the balance sheet. I know it's boring. You want me to tell you how the world's going to end, but I'm just going to talk you through the balance sheet of Silicon Valley Bank as of December 31st, 2022, which, by the way, was what, 2.5 months ago? So when you're looking at a balance sheet specifically for a bank and any company, you're going to have assets. That's things that you own or money that's owed to you. You're going to have liabilities. That's debts, stuff you owe to people, money you owe to people. And then you have equity, which is the residual. Now, I like looking at the entire balance sheet because everything's important, okay? But if you want to do a quick scan of a bank's balance sheet, well, you found the right place. So here is Silicon Valley's balance sheet. The first thing that I see is cash and cash equivalents. They had, it looks like, $13.8 billion of cash on their balance sheet. That's a lot of money, right? Wow, yes, it is. However, their cash position has to be in relation to something else. Now, think about how a bank works. Somebody needs a bank. Like, I need a bank, need to put my money somewhere. I can't just live off, I can't put all my money in FTX like all the YouTubers told me because it collapsed and now it's out of business. I need a legitimate bank. And they decide to put their money in SVB. Well, when somebody deposits money into a bank, it's your money. If you deposit money into a bank, it's your money. It's the bank's liability. It's not the bank's money. The bank has to give you your money back at any time. It's called a demand deposit. It's their liability. So when a bank records a deposit, they debit cash because they're getting cash. That's your cash. And they credit a liability. So when you look at a bank, you want to compare cash and cash equivalents up here at the top to liabilities, specifically non-interest-bearing demand deposits and interest-bearing deposits. So when people look at a bank, basically what they see is in aggregate is $173 billion of deposits. That's what people see. If you added up everybody's bank balances, what they saw from the outside, that's what they would see. But they're not really seeing cash in a vault. What you're seeing is what the bank owes to you. You're seeing the bank's liability when you're looking at a bank's statements. Because, of course, a bank doesn't just keep all the cash in a vault, okay? I mean, I guess it's not common sense because you kind of have to, learn the basics of it. And I'm no banking expert. I just understand accounting. And I understand the basics of how the banking works. But this bank had 173 billion of liabilities owed to depositors, okay? But they only had 13.8 billion of cash. Where did the rest of the money go? Well, let's see, because obviously the bank made some investments. And here's where you're going to see where they were able to do some accounting trickery. But if you actually understand accounting, you would have seen what was going on here. But here's where they hid losses, okay? First of all, we have available for sale securities at fair value. Now, in accounting, there's multiple ways to account for investments in debt securities. You can buy other companies' debt. Let's say McDonald's issues bonds. McDonald's needs to borrow money. Well, Silicon Bank could be like, yeah, I'll lend you money, and you pay me interest, and then eventually you pay me the principal back. You can invest in other companies' debt. Anybody can buy a bond. You can do it anywhere, okay? Obviously, you can invest in debt. Now, on a balance sheet, you can classify it as a trading security. That's basically a debt instrument that you're holding, but you're trying to maybe make a quick gain on it, and then you're going to sell it. Then you have what's called available for sale securities, which is kind of like the middle ground. You could maybe sell it, maybe not, blah, 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 blah. And you have held to maturity securities. These are debt instruments that you bought that you are not going to sell. Now, remember with bonds, when interest rates go up, bond prices go down. When interest rates go down, bond prices go up. Those fluctuations will show up in different ways depending on how you classify the securities on your balance sheet. For a trading security, if the bond goes up, you record a gain. If the bond goes down, you record a loss. For available for sale securities, you do report gains and losses, but they don't show up in net income. They show up in other comprehensive income. Okay? Very, very key there. And then you have held to maturity securities. You don't record gains or losses at all. Now, why would you do that? That doesn't make any sense, right? Well, think about it this way. If you buy a bond, let's say you buy a 10-year treasury and you get 10 years of interest payments and then you get paid back. What did you really lose? You're getting the principal, you're getting the payments, you're getting the interest, the periodic interest payments, and then at the end, the government's giving you back the face amount that you invested in the bond. You didn't really lose anything. You're not trying to trade it. You're not trying to like make a quick gain or a loss. You're just collecting the interest. And that actually makes perfect sense to me because if I went and bought a 30-year treasury and I never sold it, I just collected interest for 30 years and then I got my principal back. Sure, maybe I could have had I had an opportunity cost. Maybe I could have bought something else, but I didn't actually lose anything. I just collected my interest. So it really depends on your intentions behind holding these securities. Now, what did Silicon Valley Bank do? Well, I don't see any trading securities here. That's interesting. So what does that mean? That means gains or losses, fluctuations in securities aren't going to show up on the income statement. But I'm going to show you where the available for sale securities actually did show up. They actually were visible. And if you understood the basics of accounting, you'd be able to see this. Now, like I said, there's a very special account called comprehensive income, where there's certain things that the gods of accounting have determined should not be on the income statement for whatever reasons. Pensions, foreign currency translation, available for sale debt securities like these right here. And one more thing that doesn't show up on the income statement. Now, when we see available for sale securities at fair value, we could see, okay, we see some changes here. The fair value went down year over year. But where's the loss? Well, I'm looking here. Okay. I see a little bit of gains and losses on investment securities. Okay. See a little bit of that. However, when I go to the statement of comprehensive income, I see some changes in available for sale security. Change in unrealized gains and losses on available for sale securities. Unrealized holding losses on available for sale securities for the year ended December 31st, 2022. $2.5 billion. That didn't show up on the income statement, did it? It's below the income statement. Other comprehensive income shows up after net income because there's additional gains and losses that are expenses that businesses incur that may not necessarily impact the day-to-day or month-to-month or year-to-year financial performance of a business. I mean, think about like pensions, for example. Okay. Should gains and losses in pensions really show up on like a quarterly income statement? Maybe, maybe not. Maybe it's better to put it on their comprehensive income so you can still see the effects of it, but it doesn't really distort the day-to-day, month-to-month, year-to-year gains and losses of a core business. That's probably the logic behind it, okay? I didn't make the rules. I just live by them, okay? But here we can see $2.5 billion of losses. Now, where does this show up? Well, if you go on the balance sheet, you actually see this interesting account. It's called Accumulated Other Comprehensive Income or Loss. That's right. When you're accounting for other comprehensive income, at the end of the year, it actually closes to an equity account on the balance sheet, just like retained earnings. So those losses actually did show up on the balance sheet. You could actually have seen these losses occurring, and you could have been like, okay, why are they having losses on available for sale securities. What did they do? And you could have done more research and said, oh, wow, they bought a long-term debt and during historically a super low interest rate environment. And I guess they didn't hedge it at all. But here we could see accumulated other comprehensive loss is now $2 billion. $2 billion. Okay, makes sense, right? And then we have held to maturity securities at amortized cost, because these are investments that they were just going to buy and they were going to hold forever. And maybe they were. Maybe they were. Maybe that was their intention. However, they actually have a note here. Fair value of 76 and 97, respectively. The fair value of their held to maturity securities, which doesn't show up on the income statement or statement of comprehensive income because they're held to maturity, went down by about, looks like $21 billion over the course of a year. They had a $21 billion loss. But look, it only went down. They only amortized those held to maturity securities by $7 billion. Where's the loss? They don't show it because it's a held to maturity security. But here's the problem. What if you're forced to sell those? What if you have to sell those? What then? Well, guess what? When you sell it, then it becomes a real loss. And that's what happened. People got spooked because this bank had to sell. They sold for whatever reason, and they realized the losses. And when they saw those realized losses, they freaked out. And everybody wanted to withdraw this. They wanted to withdraw the $13.8 billion. Because when they looked at their bank statements, they saw this, 173. That's what everybody collectively thought they had 173 of cash, or at least that's maybe, that they had that deposited in the bank. But in reality, the bank only had 13. So if everybody's rushing the bank and this number goes to zero or close to it, how do you get cash? Well, you have to sell these and you got to sell these. And once you have a realized loss, boom, it hits your income statement and you get absolutely annihilated. Does that make sense? So the clues were there, okay? I'm not a banking expert, but I know when you see available for sale securities, you need to check the statement of comprehensive income. It'll show up there, okay? And if you see there's huge losses in there, you may want to inquire as to why there are huge losses. And you may see gains. Maybe they bought government bonds when rates were super high. Maybe another bank buys bonds now, and then a year from now, when interest rates get cut, those bonds go up in price. A lot of companies will show gains. That could be a possibility, but you don't know that until you actually look and understand the entire statement of comprehensive income. You have to understand it. If you don't, you're going to get absolutely freaking wrecked, okay? And then we have when you see held to maturity, you need to actually look up what are the fair values of those, because you're not going to see changes based on fair value fluctuations. You're not, because they're held to maturity. But just because something is held to maturity doesn't mean they potentially won't have to sell it in the future. That's what happened, okay? That's it. Simple as that. So, lesson learned, don't be a clown, okay? When you're banking with an institution, I mean, obviously nobody's going to actually do this kind of due diligence. Oh, is my bank actually sound? Well, maybe some people do. But when you're investing in these types of companies, you got to look at their portfolio. You got to look at their books and say, what are they invested in? Are they making money or losing money? Is there risk? How are they mitigating the risk? What percentage of their deposits are in cash? If there's a bank run, how at risk is this business to bank runs? And you also have to ask yourself, how liquid is their portfolio? And if they sold their portfolio, what kind of losses would be realized if they did that in order to generate cash to meet some kind of bank run? That's all the things you got to look at when you're potentially investing in a bank. That's it. Pretty simple, huh? So they're out of business. What a bunch of losers. All right, let's do some comments and then I'm done. I have to clean the bathroom. My wife insisted that I clean it. Clean the bathroom now. Yes, honey. Me smart. Me look at YouTube. Me understand. Yeah. I watched Jim Cramer. He said to buy Silicon Valley Bank. Hey, strong man. What's good, strong man? It's just enjoying my Sunday. Strong man. I'm a day trader. None of this matters if you're talking making money. People who invest usually end up holding the bag most of the time, especially when it comes to specific stocks. I would say that's true for individual stocks, but you buy a broadly diversified total market index, you'll probably be okay in the next 30 years, okay? As long as you're not a cloud and sell it. You share screen, text is a little blurry. Oops, sorry. They did not even use interest swaps, which is basic risk management. Yeah, I mean, I understand I'm not a banker. I'm not a finance guy. I understand the basics of the risks of buying long-term dated bonds with low interest rates during historically low interest rates. It blows my mind they didn't consider that interest rates could go up. It's like, oh man, whatever. Moreover, banks fund themselves short-term versus long-term assets. This is why more banks will struggle. Yeah, we'll see what happens. Strongman, how dare you insult Peter? Oh, Peter Schiff. Any update on Fubo? Is Lefebvre a stock? What, did Fubo go up or something? I don't know. Hopefully Fubo had all their deposits at Silicon Valley Bank. Oh, Jeremy, this is bullish for Fubo. Then he'll get like 20 more Patreon subscribers. I'm going to send you to the truck stop. Good. I'm already there on my own volition. Yeah, there's nothing wrong with selling gold. You're going to put selling gold in the same bin as crypto scammer? Get out of here, LOL. It's not in the same bin, okay? It's a shiny rock, but at least gold does have some utility, okay? It's obviously it does, okay? Crypto is just clown garbage. Absolute clown garbage. What are your top 10 stocks to buy for the U.S. invasion of Iraq? I like Chevron. Man, if only I had known back then. Wearing a shirt, sellout, I disliked. Hey, it's all engagement at the end of the day, man. You know, you can everybody dislike this video. It doesn't matter to me. Let's see. When interest rates go up, gold doesn't care. When interest rates go down, gold doesn't care. Gold is in your perfect store of wealth. Yeah, you bash because you're a perma bull and want more gains. Yeah. You're basically the same as SVB. You want yield no matter what. Oh, I love yields. I love return on investment. I like buying a company and it generates profits and free cash flow, hopefully perpetually into the future at growing rates. I love it. Shiny rocks are shiny rocks. That's it. Smash the like button. That's right. Why would I trust anyone wearing a shirt? Scam me. I don't know. I've been in a shirty mood today. It's probably because it's cold in here. It's supposed to be getting warmer. It's not fair. As stated, Workman's estate has been positive through the pandemics until his death. You're clown as much as Kevin and Jeremy. Okay. Yeah, that's right. I'm the same as Jeremy. Strongman, do you predict there will be other bank runs? There are some that could be vulnerable. I even heard Bank of America's unrealized losses worth 40% of their cash. I honestly, I don't know. I mean, if there was a systemic bank run, yeah, the Fed would probably have to lend all the banks money. But I don't know. I don't think this is the end of the world. I think this is just a clown bank that went under. But then again, I don't know. Bonds, do they pay interest annually? So how does the interest yield on those work? Aren't they 3 or 4% currently? They don't compound interest either. How can I buy them? I mean, you can buy them directly from if you want to buy government bonds, go to Treasury Direct, or you could do it. Most brokers should be able to allow you to buy bonds, but it depends on the bond. Usually I think Treasuries, I think they pay semi-annually. That's what I think. But double check. But yeah, go to your broker or go to Treasury Direct. And basically, the rate that you see is the annual rate. So don't think if you see a three-month bond that's 4% or 3-month treasury that's 4%, that doesn't mean you're getting 4% in 3 months. No, you're getting a fraction of that. The rate's always the annual rate. How is that legal? How's what legal? SVB had to sell Tattooed Chef at a loss the same day everybody wanted to withdraw. Could you imagine a bank that had all its money in Tattooed Chef? That's risk right there. Yeah. What do you think Monday will look like? Huge S&P drop? I have no idea, man. I personally don't care. I hope the market tanks because of Silicon Valley Bank. I hope there's destruction. I got my tax refund coming soon. Woo, baby. I'm buying the dip, bro. Yes. Fubo hit all-time low. Of course. Buy the dip, bro. One bank collapsed, all the zombies scream for QE. Yeah, see, all these clowns are just taking advantage of this because they have these tech stock bags, right? And they just want to pump their bags. Oh, please cut rates, Fed, please, so my stocks can go up, so I can grift more on YouTube. Please, please. That's what they want. I see right through these scammers. Oops, I almost put you in timeout. My bad. What do you think? Okay, yeah, I already answered that. I have no idea. Let's see. Do you think there's a bubble in index funds? I do not. Did Hims give you a free subscription for advertising them? I wish. I need some. What are your top 10 stocks to buy for the CIA coup? I like American Fruit Company bananas. You've been reading your history, haven't you there, young man? For most of the tweets I've been seeing, it's pricing a rate cut at the end of the year. Previously, I've seen S&P normally bottoms out when rates cut. Yeah. Just keep, I don't know, just dollar cost average. Higher rates could hurt other banks that misjudge the maturity of deposits. Yeah, everybody's freaking out. Everybody's freaking out. I'm not worried. I don't know why everybody's freaking out, okay? I got money spread out everywhere. I got money in Vanguard, Fidelity, Robinhood, Thrift Savings Plan, my bank. I even have a business checking account that I just opened. Actually, I should probably. I got an email from my business checking account. They're like, everybody's concerned. They're like, oh, don't worry about the recent drama with Silicon Valley. Everything's going to be okay. And I was like, oh, thank God. I have no money in there, though. But yeah, I got money spread out everywhere. I'm not worried about it. Maybe that's a lesson. Maybe you should spread out some of your money. Maybe you should put it in different banks in case one goes under. Something you learned. I don't know. Because even if you have FDIC insurance, what if it takes forever to get it? What if you're sitting there for weeks and you need your freaking money, you can't get it? Just saying. Let's see. VT my ET phone home. Front door or back? Always the back door. Always. Do you invest in cryptocurrency? Absolutely not. I never, ever will buy cryptocurrency unless it's like screw around and trade with. Okay. Kid Freshie will call me out because I spent like I made like $20 off Dogecoin or something. I was buying, so it was about a year and a half ago. I was like, oh, I'm going to put $50 into Bitcoin, Ethereum, Dogecoin, and some other stupid coin. And then after like 2 days, I sold it. It was so stupid. Let's see. People freaking out because they listen to Susan on you. Who's Susan? Who's Susan? Yeah, you don't have the balls to do analysis on CW. Hit the timeout on that belly boy. It's what you and Cole do. CW. What is C? I mean, I'm drawing a blank. What is CW? I have shorts on TV dealership Roku and have 20% of their. I need to do a video on that. See, Silicon Valley was a clown bank. Why? Because they did business with a bunch of freaking clowns. And I'm actually going to do more research into their loan portfolio. So I know they had all those debt securities, right? I know they had those. But they also have that, let's look real quick. I'll show you. They also have some loans. They lent money to people. It's right here. Loans, amortized costs. I'm curious what those loans were. Who are they lending money to? Are they lending money to a bunch of clownish tech companies that make no money? Yet more risk. So they buy low interest rate bonds, long-term low interest rate bonds, had historically low interest rates, and then they lend money to a bunch of clowns, and they accept deposits from a bunch of clowns. Well, yeah, pay for what you get, I guess. Man, I'm grifting this whole thing, man. I got 200 viewers on a live stream. Woo, baby. Man, we need more banks to collapse. This is going to be great for my channel. All right. Couple more comments and I'm done. I got to clean the bathroom or my wife will yell at me. Tech bros might need to sell their $3 million. Oh, those poor tech bros, little grifters. Yeah, they all got rich off working for clown companies. I hope they all lose their money. Probably won't be able to afford their 20K monthly payments. Okay, here's a tip. If you get, or if you have an opportunity where you're making a ton of money, guess what? Save it. Don't be a clown and just buy it and spend money above your means because you had one good year. Okay. I had a good month like in January with all my YouTube side businesses and all the stuff that I make money on the side. Did I adjust my lifestyle because I made a decent amount of extra side money in January? No, because that could change. Some months or some years you can do really good and you think that's going to last forever. It usually doesn't. Okay. When you have an opportunity like that, you should save, put it away. Maybe enjoy yourself a little bit, but you should save most of it for a rainy day. Man, if I ever had a great year on YouTube where I made like 100 grand, oh boy, that would be 90% of that would be in VT. And I'd probably spend like 10 grand for fun. You can't be stupid. I wouldn't buy a new house. Oh, I got to buy a new house now because I'm making more on YouTube. And then the next year my YouTube gets banned or something. Let's see. Silicon Valley was a clown bank, but it allowed a lot of companies and economic growth to prosper. I mean, yeah, banks have their place, obviously, but it's a clown bank. I mean, like, you deal with clowns, this is what happens. Let's see. Like I said, I'm going to do more research into their loan portal. I'm really curious, like, who they were lending to. That's going to be hilarious, I think. 10-year bonds are at 3.5%. It pays. It says paid semi-annually, so it's one. No, whenever you see an interest rate, it's the annual rate. That's it, unless they say otherwise. Okay, if a 10-year bond has it says 3.5%. That's the annual rate, unless it specifically says otherwise. But trust me, if you're going to buy individual bonds, just call your broker, call Fidelity, whatever. They'll walk you through the individual bond. But yeah, generally, like, that's a mistake people make. Is they don't think it's the annual rate. It is. Bonds or VT? Why not both? Gold is the most useful metal in the periodic table. It's a monetary metal, not an investment. Well, people think it's an investment because they're clowns. Bailouts for them, never us. Oh, dude, we got bailed out so much during the pandemic. We got stimmy checks. We got child tax credits. We got generous unemployment. People got so much free money. It was unreal. I wish I had 3 kids. I only have 2 now. I wish I had 3 kids back during the pandemic. Oh, my Lord, I would have made so much money off child tax credits and stimmies. Oh, baby. Because when the first stimulus checks came out, it was just me and my wife. And then we had our son in 2021. So I got a child tax credit for him, and I got a stimulus check for him for $5,000. If I had 3 kids, 15 grand. Oh, baby. I missed my opportunity, though. Oh, well. But yeah, people that have lots of kids, they made a fortune during the pandemic. Unless they lost their jobs, but you catch my drift. If you still had a job, you were doing pretty good with kids. It's a strong possibility based on the evidence. Russia and China both encouraged to buy gold. Dollar used to be based on gold. Then governments can finance wars and stuff. What is your view in the Indian share market? Can be fed? I don't really do research into India. I mean, I'm sure I own Indian stocks and BT. People need that money now, though. Some people. That's why the economy is so bad right now. Let's see. Market crash on Monday? I have no idea. I hope so. How far away from retirement should I buy bonds? Do you believe in going and doing a glide path? I mean, yeah, you should figure out a glide path. Like, if you're indecisive, you just don't know, just go to Vanguard and buy a target retirement fund, okay? If you just have no idea. Or you could, I don't know, do more research and figure it out. But basically, when you buy bonds, at least short-term bonds that are good bonds, like short-term like treasuries, that don't really fluctuate based on interest, you're basically like locking in gains in that point. So, if you start buying bonds earlier, especially short-term bonds that don't really fluctuate, if you start buying them earlier, you're basically taking profits, but you could potentially miss out on future stock gains. That's kind of the trade-off. But you got to be careful. You don't want to buy long-term bonds during low interest rate environments, because if rates go up, that's a risk. You get wrecked. People think bonds just are safe automatically. That's not the case. There's interest rate risk. There's credit risk. There's all sorts of things you have to consider when you're buying bonds. Just saying. Let's see. What is your opinion on the demographic collapse of the West and East? I don't think it's as bad as people say it's going to be. I think people are just going to work longer. And I think we'll just import more immigrants, at least in America. We'll just import more immigrants. We need 10 million more people. Let's bring them in. Yeah, it's not the end of the world. I don't know. People are freaking out. Let's see. I have 10 million kids. Dude, I know a family that had like 5 kids. Oh, my. Yeah, they got so much money. Oh, baby. Oh, I'm jealous. I'm seriously jealous. Let's see. How do we boost the birth rate of the U.S. so that there's nothing you can do? Okay, like, just don't worry about that stuff. Okay, focus on like building yourself out. Don't worry about birth rates, and then maybe go have kids when you're older. See, I'm helping the problem here. I got 2 kids. Those stimmy checks will have to be paid back sometime in the future, and it will be hard. Yeah, they'll probably be paid back by rich people. What's going to happen to the CEO who sold a lot of stock weeks? He'll probably get a government grant. That's how the world works. If you're a clown and you sell all your company's stock that you own right before it collapses, here's more money here. That's how it works, okay? I've already lived enough on YouTube to see that clowns get rewarded. Let's see. All right, there's too many comments. I don't know what to do anymore. I'm overwhelmed. Will you panic sell VT? Yeah. First thing tomorrow, I'm selling my whole portfolio. You know what I'm gonna do? You know what I'm gonna do Monday? I'm gonna wake up, have coffee, and I'm gonna go do accounting. That's what I'm gonna do. Let's see. USA is in good shape. Yeah, we can always bring in more people. That's one of our strengths. We can just bring people in. Sell covered calls deep in the money for a stock. What are your thoughts? Dude, just stop making stuff complicated. Just buy a total market index and hold it forever. This economy is fake. US is in too much debt. Collapse coming. No, it's not. Eventually, they'll cut interest rates again, and then money will be cheap, and stocks will go up, and the government can borrow money at super low rates. That's how it's going to be, okay? Weak boy finance, okay. People don't want kids in the environment. I never understood that. Like, people always make all these excuses not to have kids. And most of them, in my opinion, are just BS. Oh, the environment. Yeah, and it's funny when people say that, like, oh, overpopulation, you can't have kids. And, like, obviously, Western countries and developed countries don't have an overpopulation problem. They actually have a demographic decline because they don't have enough kids. But all these liberal clowns are like, oh, see, if you have kids, you're just going to hurt the environment. Yeah, there's too much people in the world. No, there's not. You're wrong. All right, that's it. I think, let's see. All right, last comment. Don't run away. If you type Form 4 SEC and search, you will see all executive management sold massive stock on March 1st. Oh, that might be another video. I'm just gonna milk this bank collapse. Oh, milk it. Woot, woot, woot. Is this him? Is this the actual guy? All right, guys. Talk to you later. Cheers.